talking a little bit about some of the different types of private equity funds that we have in Switzerland, we obviously have private equity funds that are concentrating on the DACH region but have a presence in Switzerland, compared to pure Swiss funds, so funds that are actually based here, that are funded through Swiss investors and who exclusively focus on the Swiss market. If you think about the opportunities that are in the market, do you think either of them has a specific advantage, and if so, what is that advantage?
I think there is probably we have to distinguish between the small to mid-cap segment, roughly transactions up to 200 million. In this segment, there are a few Swiss-based and Swiss-funded PE funds, and in the small-cap segment, they build more credibility, and in talking to typically family-owned companies, therefore they have an advantage from a reputational point of view. They're in a position to demonstrate truly Swiss-based teams, have a position to present a track record over multi-years, and this is less the case for someone only having a rep office or some limited presence here in the market. But I guess if we are talking about deals done above 200 million enterprise value transaction size, then this, I would say, local advantage disappears to some extent, because you have more professional investors involved, and also the sellers do not focus so much on the, let's say, continuation of their specific heritage and the company they created. But yes, in the small cap segment, I do agree.
So something like a situation where you've got a small cap business privately held for many generations in one family, and exit, that's the type of company that would obviously, or it sounds as if would be more comfortable with the pure Swiss player as a buyer.
Yes, in these situations, if the potential buyer then can demonstrate his dedication to the Swiss market and also present its funding by Swiss investors, it could help to persuade some aging seller. And in this perspective, yes, they clearly would have an advantage. And also, if they are purely Swiss based, they tend to have a less aggressive approach on funding.
Yeah.
Therefore, what we heard in the panels today, a funding of 3 to 3.5 times leverage in the Swiss context is considered to be fair and reasonable leverage, and therefore this gives more confidence to sellers.
Okay, great.